And here we go. I see us loading up there. And I think we're good. So welcome back, everyone, to part 7. I'm just waiting for the time that I lose track of that, but I haven't yet, of our Back to Basics series, where we're going to talk about trends this time. So again, if you're new here, just a quick wrap-up of what we're doing. At our last annual meeting, there was a bunch of people who are working with trade ideas, but not necessarily traders, who are just interested in learning more about what it is we do and the trading and everything involved there. And we just kind of thought it'd be a great idea to bring you guys along for the ride and watch as I kind of teach people who have never traded before and work in different areas of the business, and kind of brought them up to speed and hopeful stuff our technology offers. So quickly, I will go over last week, and I guess I'll mention as well, all of these are being recorded. They're all being put into a playlist on the main Trade Ideas YouTube channel. So you can see all 6, you know, when you're done watching here. If you want to start up again and watch from 0 on to catch up, you can certainly do that. Last week, we looked at support and resistance on charts. So we've gone now basically from what is a stock into pretty far into technical analysis. There's still a long way to go, but we're getting there. And then just an introduction of everyone on the bottom, and that was a video as well if you'd want to see that. So what I will do is bring up this one and see if anyone had any questions. So this is the support and resistance concept that we went over last week. Does anyone have any questions or any feedback from their homework or anything like that over last week? No one? Okay, we'll continue on. So essentially what we're going to be looking at this week is trend and trend analysis, where essentially what that is looking at the movement of stocks and more of a direction. So what we had talked about to date started with order flow, started with how markets move, you know, what happens when someone's bidding for a stock and offering for a stock, and how a trade is actually taking place. And then we started to look at charts, and we started to look at, okay, well, if that's how a trade takes place, why do stocks stop at certain points, and why do they reverse at certain points? You know, why is as a stock, you can see here on our picture, as the stock is moving down, right? Why does it stop here? Why does it bounce here? Basics of how this order flow that we started with kind of translate into real trading. So from there, we're going to talk about how stocks trend, you know, and you'll probably hear things like this quite often, where we talk about, you know, so-and-so is in an uptrend, or so-and-so is in a downtrend. And this is basically the primary thing you're going to be looking for as traders, is trying to get in on this trend, because that's how you end up making money, right? So as stocks move higher, you want to be riding that trend, and as stocks move lower, you need to be riding that trend, as well as counter trend trading, which we'll talk about in a bit. So essentially, what is a trend, right? So what is a trend of a stock? And it's the same as kind of thinking as a trend in fashion, or a trend in any sort of real estate market, right? A trend in fashion would mean that something has gone from something that really nobody is interested in to more and more people being interested in it, to more and more people then going and buying that shirt or style of clothes or whatever, all the way until that trend reverses, and then people stop caring about that anymore, and that trend will decrease as well. So this happens in sales. You know, again, a lot of you guys look at the internals of Trade Ideas and our sales and how we're doing, and you'll see trends there. People will see trends in weather patterns. You know, pretty much anything you can think of has some sort of trend analysis. So how does this benefit traders? You know, we talked about support and resistance and why that's important in the last video, because we wanted to know potential areas where a stock we may be involved in could stop or could reverse, or areas that we may be interested in getting in. So then the trend is going to be the thing that actually makes us money, right? If we identify an area of support and you see the stock come down to that area of support and you buy it, essentially the next movement up will be a mini trend. So time frame here is a bit irrelevant, because what you'll notice is a lot of these things are fractal. You know, you can be in a strong uptrend on a long-term basis over months or weeks or years, and then on a short-term basis in hours or minutes be in a downtrend. So it's going to be important to find the time frame that you're interested in and try to spot the trend and the trend reversal there. So here is just a simple chart of essentially defining what a trend is. So I'm going to move us here a little bit over to this side to start with. So this chart just starts in a downtrend. And essentially how we define a trend is with higher highs and higher lows and lower highs and lower lows, which essentially just means the peaks and the troughs of the chart. So I've had you guys studying charts now for a few weeks, and you've probably noticed that nothing moves in a straight line ever. There's fluctuations in every move. So a stock may be going up over a long period of time, but you know, it fluctuates, and everything I have you looking at right now is daily charts. So in that fluctuation in a period of time, the overall trend remains. So the art of this is finding out what the overall trend is while ignoring those fluctuations. So here we can see if each of these, where's my pen? Right here. So this, essentially, this chart sold off here, came back, and put in a high right here. At this point is where sellers came in. Sellers said, okay, this is where I think the high of this price is going to be. It's going to move lower for whatever reason. So I'm going to sell my stock or bonds or clothing or whatever we're talking about with trends right here. And as those sellers come in, they push it lower. And then there's an area that buyers come in and say, okay, I think this is a bit too much. I'm going to start buying here. Gets pushed up again. So what we were talking about before was essentially horizontal support and resistance, right? A stock ping-ponging against buyers and sellers up here. This is taking that and flipping on its side. So the evidence that's kind of given is when you see a stock hit an area like this and then reverse, is that what we've identified is that sellers are now not as bullish about the stock. So sellers are actually more worried about the stock, and they're willing to come in at a lower price to sell. No longer do they think that this area is the place to sell. Now they're thinking that it's lower. And we talked about this a little bit last week, where prior areas, and we called the two timing bastard play, where prior areas of support now become resistance. And we'll notice this quite often, but it's not always the case that they stop at these predefined levels. But what's important to note is that at this point, the sellers have kind of said, okay, I no longer think this is a good value to sell at. Now it's lower for whatever reason. I think this is a value to sell at. And as the stock comes back down through, these buyers who said, I think this is a good area to buy, aren't there anymore. They're gone. They're now waiting for a lower price. So this kind of sellers being more aggressive and buyers being more passive will cause a downtrend. You know, every time a stock moves, it moves in choppiness for a couple reasons. So the main one I'm going to talk about is, imagine we're one guy, right? You guys said you like the drawing, so I'll draw. We're this one guy called Ted, and Ted picked the top of this stock right here. He sold right there and he nailed it. You know, we don't know what happened before on this. We don't know what this is, but say this is Apple and he thinks that iPhones suck. So he sold his stock right there. He shorted it, betting that it was going to go down. At some point, Ted's made a bunch of money. So he has to cover his position. So to cover a short position, you have to buy the stock back. So if there's enough Teds who then need to buy the stock back, they're going to cause a little push up like this, right? So Ted, really smart guy, he sold here. He saw the stock move down. He covered it and said, okay, well, I'll wait to see if it bounces and maybe I'll sell it again. So now the same thing happened here, where he sold here and he saw another chance to get in the stock. But he's worried that it's not going to get back to where he was able to sell before. So he puts his sell out earlier, right? And then the same thing happens again. He's right. He makes a bit of money, and away you go. And he does this a few times, each time finding a place to sell and then covering, making his money as the stock moves lower, until the one time where when he sells the stock and he waits for it to move lower and it doesn't, right? It ends up popping up here. This is a trend reversal, right? And this happens all the time. You know, the market has never in the history moved in one direction for a long period of time, one way or the other. It's always, you know, overall, over the long run, hundreds of years, the market moves higher. But if you look at individual stocks, there's usually an uptrend, followed by a downtrend, followed by an uptrend. So this area is when, you know, people start buying iPhones again. They come out with a car or whatever. So what happens is when the stock looks to sell, it doesn't work and it pops up, and now it's beaten this pattern. So no longer is it having a pattern where sellers are constantly beating it down to a lower price, but now the sellers are getting pushed back. And we can just look at the same thing in reverse. People are buying it here, stock pushes up, and they look to take their profits. As it comes back down, they're worried that it's not going to hit this price, so they put their buys up at a higher price, right? And so long and so forth, kind of down the way here. So that's the premise of a trend. And essentially what it is it's a way of saying, looking at the direction of the market, whereas we can't really define a direction easily because every direction has these little fluctuations. So what we're looking for is this trend. And essentially there's three types of trends. So what we started with last week is a sideways trend, you know, stocks that are beating around one way. So then you either have an uptrend where stocks are generally moving higher, which we're seeing in a lot of stocks right now, or we have a downtrend where stocks are generally moving lower and you have this lower push. So part of the job as a trader is to combine these two things, and these are why these two lessons, I think, for technical analysis are the most important, because essentially what you're trying to do is you're trying to A, find the area to buy and sell, and then B, you're trying to stay on the right direction, you know? So you can't just sell a stock and then make money. You need to be on the direction of the trend. So there is something called counter trend trading, with a lot of people like to do, where they try to pick the top of the market or the bottom of the market. I think this is kind of a fool's game, and I'm going to discourage you guys entirely, at least beginning doing it. You know, the Brian Shannon, which I think you've all met, who is my personal mentor when it comes to these types of technical analysis, always talks about the meat of the move. You know, you can make a lot of money even if you were just involved in this little part of the downtrend. You don't need to find the top. You don't even need to find that reversal in the trend. You just need to identify which way is the trend going, if you think the trend's going to continue, and then find the best area to buy, which will generally be a support or resistance area. So by combining the last lesson and this lesson, you can start to generate somewhat of a trading plan.
I have a quick question.
Yep.
With the uptrend, the previous slide.
Yep.
The uptrend, the trend line is at the support. That's the support line still, or because it's underneath?
Yes. Yeah, and that's generally the way technicians will draw it, where in an uptrend they'll draw it under the price, and then in a downtrend they'll draw it over the price. And again, it's a way for them to visualize so that they kind of ignore all of the choppiness that's happening here, and they can focus on just this line.
That's still kind of that's still the support line basically as well, and then the downtrend, that's still the resistance.
Yep, and you'll notice this a lot in charts. If you just take a chart that is in a trend and try to find a line of best fit, what you will notice is that a lot of people, and this is again that self-fulfilling prophecy that we talked about before, where if you draw a line of best fit, what will happen is a lot of people will draw that same line. So someone drew a line basically connecting this point and this point, and now he's got a trend line. So if enough people are looking at this uptrend and enough people are looking at this trend line, you're right, this will become an area of support, whereas stock comes down to the trend line, if there's enough people waiting for this bounce, they're going to have their buy orders in place, and their buy orders are going to cause a bounce. So again, the whole self-fulfilling prophecy is that enough people are following something, then that thing is most likely going to happen just from their actions of following that thing. That make sense?
Yeah, and so they're buying at that uptrend line, and then they're selling when it hits that resistance line.
Yeah, exactly. Yeah. So whoever bought here, when they see this kind of rally happen, well, they're not going to make money until they sell the stock, right? So we're talking about trading, which is different from long-term investing, where people just hold things, you know, for 100 years and hope they go up. But as a trader, the only way that you take that money and you put it in your pocket and then devote it to the next trade is by taking the sell. So enough people selling as the stock rally will cause it to pull back. So what you'll notice is that this line, you know, isn't always 45 degrees. Sometimes it's a very low sloping line, sometimes a very high sloping line. And what you can judge by this is how aggressive are these buyers stepping in? What, you know, are they waiting for the stock to pull back to a nice low trend line like this? Well, then they're not really that aggressive. You know, they're okay with waiting for the price to come back. If they really, really want the stock, what they'll start doing is they'll start buying at much higher prices. So they're okay that they, you know, say this is $5 on the stock and this is $10. They're okay with missing the $5 trade and still buying at $10. Whereas here, this might be $5 and this might be $5.50. So they're basically, they want that stock to pull back further before they act. And judging the aggressiveness of these people is basically how much do they want it. You know, if you were selling something, if you had a store, and every time you open the store, everyone ran through the doors and bought all your stuff, you're going to demand a higher price for that, right? And it's the same thing that happens with the market. If every time the stock pulls back, there's a whole bunch of people waiting to buy, then what other traders are going to do is they're going to say, okay, well, I'm going to make you buy up at a higher price. And that's essentially how you get these trends. So then this is going to be, it's a little bit harder to visualize when you're looking at charts. This is why I wanted to make sure you guys had a pretty good grasp of candlesticks and of support and resistance. But this is a chart of UPS. It's a fairly old chart I just grabbed online that shows this better. But again, I just wanted to show you guys that it's very clean when you're just looking at lines. And this is why a lot of people, I think Rudy, you asked when we went over different types of charts, if people use line charts. And a lot of people do, because it makes it easy for them to visualize trends. And when we start to go over indicators like moving averages and this type of thing, you'll be able to notice that a lot of people use moving averages for the same reason, where it draws a line, a straight line, on a chart that has candlesticks. Right? They'll draw a line like this. And it may not tell people where to buy and sell, but it just gives the eye the ability to quickly see where the trend is. But the most important thing to note is that you're always just looking at where are the turning points. That's how you identify a trend, right? And we care about the turning points only because that's the only area where a battle was fought and then changed sides. So the reason that this turning point and this turning point are important to the stock is because the stock was moving down here. So this is why I talked about how these are kind of fractal in nature. If you zoom in really close, this is a little downtrend, right? We had a low, we had a lower high, and then we had a lower low. So there was a little mini downtrend in this big uptrend. So this is the area right here where buyers said that's enough. They came in and they fought the sellers and they won. You know, you'll notice a lot of traders talk a lot about fighting when it comes to charts, because as we talked about in the order entry, there's, you know, your bid and your ask, and they're always kind of competing for the best price. And how a stock moves is when one side gets overwhelmed by the other side, when enough people cross that line in order to push prices up or down. So the reason that trends are so important is they show us who's winning, right? In this, every time the stock makes a pull back, the buyers are pushing us up higher. The stock pulls back again, so the sellers win a little bit here, and then the buyers come back in and they win the fight, and so on and so forth. So this ends up pushing us in one direction, and then your job as a trader is always just to be on the side of the people who are winning. You know, it's think of it kind of as a surfing analogy, right? This is why in Trade Ideas you see we have idea surfing, and there's a couple references to surfing there, because you know, when you're surfing, your life's a massive pain if you're fighting the waves. So in this situation, you want to identify what those waves are, use support and resistance to try to figure out where these inflection points will be, and then use those to ride this wave in the right direction. You know, again, from 44 here to 68 here, you're on near double your money, a little bit shy of double your money, staying with that trend, where there's a lot of traders who try to pick these tops and bottoms.
I have another question.
Yep.
So if I'm trading, am I just watching this chart? And I mean, I don't know, like how am I making the decisions to, I don't know. I guess what I'm saying is like, what's provoking this trend? Am I watching social media? Like, how do I know if that stock is worth it?
How are you tracking down that stock?
Right.
Yeah.
Well, hopefully you're using the wonderful equity scanning software called Trade Ideas, which will take anything that you want. If you want to track social media, we have scans for that. If you want to track just trends, which is a scan that I'm going to give you guys for this week's homework, there'll be a scan for that as well. So how you pick these stocks is going to be a little bit up to you, and we're going to get on different entry and exit criteria, but this is the hard part of trading. Is you're going to build an entire plan, and your plan is going to say, I'm going to look for stocks that are doing this. I'm going to encourage it to be trending. It's entirely up to you, right? I'm not going to tell you guys exactly how to do it. And then we're going to talk about when to enter and why, and where your stop loss is going to be and why, and where you're going to take profits and why. And those are going to have to be built into your trading plan. So, you know, for example, here, what some people may do is you may just draw, excuse me for being bad at, you may just draw a trend line like that, and you may connect this low and this low, and then have this on watch. And in Trade Ideas, you can set alerts to say, if the stock gets to this price, let me know, and then go about your day, and a box will pop up and flash in your face and say the stock you were looking at is at that price, and you may decide to buy right there. Some people, one thing I do a lot of is when the stock is in the area they want to buy. So say you were saying you did your trend line, you did your trend analysis, and you think 56, if this pulls back, is a great area to buy. What I do a lot of is I say, okay, well, I want to see the price close or cross above the high of the previous day. So you can, within Trade Ideas, within our Brokerage Plus module, say, if this candle here breaks this candle's high, then buy me some shares. If it doesn't, if it ends up turning down and going like this, don't buy me anything. So what will happen then is, again, you can go about your day and continue to do what you normally do, and you'll get an alert when that triggers. So there's going to be some nuance to this, and we'll end up talking about this. The other thing that we're going to do is we're going to have you backtest some of your strategies. So what will happen is you'll have a setup, and this is why I have you guys staring at charts now, is I'm trying to get you guys to get a feel of what kind of charts you like to look at, and we're going to throw that into the system, and then using the backtester, we're going to optimize that so that it ends up working the way you want, and you know the statistics behind every trade before it happens. So then all you have to do is watch, and again, we can set up alerts and sounds and pings and bullet noises and whatever. So your job is just going to be to sit and wait for your computer to make a bunch of ruckus, and it will show you the charts that have already met your criteria, and then you just have to figure out when to buy, right? And it sounds easy, but that's really the hard part, is pulling that trigger for the first time. That was very rambly. Did I answer your question at all? I do that sometimes. Yeah. I'm the king of tangents. So here is a more recent chart, and this is from Trade Ideas. And I just wanted to show, again, the pretty clear kind of understanding between, you can see this chart here is making these patterns of higher lows. So you could, again, draw a trend line, and you could draw it multiple trend lines and try to figure out where it is you think the pattern is going to lie. But at some point, right, you generally speaking get a change in trend. And this is why we're traders instead of investors, which is another thing I wanted to push home here. If, as an investor, you just bought, and this is Urban Outfitters, if you just bought this stock, you know, here around $30 and held it, and this is from November until a couple days ago, I put this chart in, really not a whole lot's happened, right? It's gone from, that's a horrible line, but it's gone from 30-ish to 30-ish. Whereas for a trader, there was a clear uptrend to ride. There was an area where these higher lows stopped, right? Which was, let me clear, which is right about here. So if we just note, right, this low, and then here's a higher low, and here's a higher low, and then here's a higher low, and then we did this. So instead of buying here and then selling at both the same price, you could have ridden this trend until you saw a violation of the trend and gotten out here. So where an investor would make this much money, right, a trader can make this much money. And then as a trader, when you notice the same thing, you're seeing this pattern of a high made here and a lower high, and then a lower high again, and a lower high again, you can flip that. So in the same way, just by riding these trends, identifying the turning points, which you'll never get the top, and it's never the goal, but there's a lot more to be had out of the exact same stock than there is just buying and hoping these trends continue forever. I think that's all I had this week, so I'm just going to leave up my information here. We should add your guys' information to this as well. And next week we're going to go a little bit into indicators. And one kind of thing that I'll preference is I'm not a big fan of indicators, so I will explain them to you, and there may be some help for you there, but at the same time I'll try not to be super facetious about it, because there's a lot of people, and you guys probably see it as well dealing with our product, that come in and want this indicator and that indicator and every indicator under the sun added to the system. But what's important to note is that every indicator on Earth that has ever been created has had the basis of the last 3 lessons, which is candlestick analysis, support and resistance, and trends. They all focus on this same, this is the data at which everything else is built. So these are the building blocks that's going to change all of your trading. All of your trading is going to have something to do with, I think the stock is going to trend in this direction, so I'm going to enter it long if I think the stock's going to trend higher. I'm going to enter it short if I think the stock's going to trend lower. And I'm entering at these areas and taking profits at these areas because I believe there's support and resistance here. So these two, although they're, there's a lot of art, there's a lot of trying to understand what's going on there with these, but everything is kind of based around these 3 topics. So before we end, I have another bit of homework for you guys and another lesson. So this, which I'm sure you've heard of a bit in our marketing meetings, is something that me and Dave and Andy and Steve, we've all put our heads together to come up with what we call the stock composite rating. So this has technical, fundamental, social indicators. Right now we're just looking at technical. We'll get to all that other stuff down the road. But what it's going to do is it's going to give you stocks with that technical side that are, at least for the short term, trending higher, right? So your job for next week is to, again, at the end of every day, kind of scroll through this list, find things that are trending in the direction, watch them for a few days, again, write them down and see where it would have made sense to enter or exit. And the two tips I'll give is if we look at a simple trend like this, right? Stock moved up, something happened here, it pulled back, and then moved higher again. The two real ways or three real ways that people will look to enter trends is they'll either look to buy on the way down, right, and try to figure out where the stock is going to turn. They'll wait until it has already turned and is starting to push up, which would kind of be like something like this on this chart, and they'll look to buy right here. Or they wait for the last time that sellers showed their face to fail, and they'll look to buy right here. So essentially, it's a how patient are you, and how much risk tolerance do you have? Because if you're the person who's okay with waiting for the stock to pull all the way back this way, this is the trader I wish I was, but I'm not, and you buy here, you can risk a very small amount of money. But what's going to happen is quite often you're going to say, I think this is going to bounce here, and it's going to bounce like right here, and you're going to miss your trade. The person that turns around and pops back up, this is more of the trader I am. So again, here's a better example where it would pull down, and I would wait for it to break up, and I'd wait for this little area here to buy. So what I get to do is I get to risk from my entry to here. So I risk more than this guy, right? But I essentially don't have the patience of that guy, so I don't get as good of a price as he does. And then there's this person who would wait for the entire confirmation, where he would wait for the stock to push up, pull back, and then break, and he would buy the stock right here. So his risk is kind of from here to down here. So he's risking the most amount of money, but he's waiting for the most amount of confirmation. So he's able to, I would say, most likely be right more often, but when he's wrong, he will lose more than I would and lose way more than this person would. So again, this is where it's going to come back to what is it that you do? What is your kind of methodology behind it? And that's going to be different from person to person based off their trading. So while I see if Chad had any questions, I'll ask you guys the same. I just realized we haven't been on screen most of that time. That's okay. Can we ask questions? Yes, chat. You can ask questions for a few minutes. These people may have to take off for a bit. But is there any questions from the trade ideas people before we kick it off to chat? Nothing? Okay. I'll give X325 a few seconds if he's still here to ask some questions. Someone else talked about parallel support and resistance, which is something someone will do where they'll draw this kind of line of best fit that we talked about before, and they'll take this line and copy it, and they'll put it on the top of the chart as well, and that will make a little channel for them to play on here as well. So I think X325 may have timed out on us here. So again, any questions, you can hit me up on Twitter, or you can email in to Trade Ideas, and we'll get back to you there. So again, if there's no questions from you guys, then I will call this here, and everybody have a good day.
X325, just answer the question if you want to.
Oh, okay. Is it true that major institutional traders cause moves in the market and retail traders are a small part of the market? That is right, and that has to do with what we talked about with order flow. So basically, what he's asking to explain to you guys is it the big guys, you know, banks and giant hedge funds and big firms, are they the guys that move markets and we're just along for the ride? And that's 100% true, where, you know, someone who's a retail trader who has a large account, $500,000, $1 million, is nothing compared to Goldman Sachs, who has billions of dollars to play with. And when they go to buy Apple, it's going to take them a few weeks to do it. Where if they were to just to go and hit a button and buy $1 billion worth of Apple right away, they're going to push the market because of this order flow stuff that we talked about, right? There's only so much sellers there at any given time. And if they knew that Goldman Sachs really needed to buy Apple, they're not going to give them a good price. So what happens is, and this is follow-up, I see you in chat, he's asking about, does it mean that the institutional traders cause the trends? And that's 100% right. So what these big guys will do is they will push the stock up a bit, and when they notice that they're pushing the stock up a bit, they'll leave and they'll wait for it to drift back down, and as it's drifting back down, they'll start buying again to push the stock up a bit. So that's kind of the example I gave with Ted, is I made him a human, but Ted usually is a bank or a broker or one of these large types of institutions. So all right, guys, I am going to take off. We should be back next week. I'm traveling to New York City with Sean. I don't know if we're going to have a chance to hang out a bit, but I'm sure he'll post something if we do. And then I should be back for next week's lesson, where I think we're going to go over indicators